Happy Friday, everybody. This is your market update for May 19th. So the stock market started the day higher across the board, but unfortunately since then has wavered for a couple of reasons. One, it appears that there's some concerns over lawmakers coming to an agreement on the debt ceiling deal. Yesterday, there was a lot of optimism in the market, but unfortunately that is not the case today. And as a result, stock market is down. Currently, the Dow is down 195, S&P 500 down 16, NASDAQ down 56. In addition to concerns over the debt ceiling deal, there was evidently a news report that came out indicating that Treasury Secretary Janet Yellen had made some comments to some chiefs of large lenders indicating that additional bank mergers may be necessary moving forward. As a result, bank stocks have started to slide a bit as well. So not a fantastic day in the stock market. Mortgage-backed securities started off the day down 12 basis points and have been somewhat volatile this morning, but currently down only 8 basis points. But certainly we've had some deterioration in the bond market over the course of the last several days. Would be nice to get some bond-friendly news so that we can gain back some of what we lost and get some improvement in interest rates moving forward. Fed Chair Jerome Powell did make some comments today that would have appeared to be bond-friendly, but the market hasn't reacted a whole lot. He had made comments basically indicating that due to the stresses in the banking sector that the Federal Reserve may not need to be as aggressive moving forward in their monetary policy and may not need to increase rates as high as what they had initially thought in order to bring inflation down to a reasonable level, or basically their desired level. But then he followed that up indicating that they will remain steadfast in their fight on inflation moving forward to get to the point where they want to be to meet their goal. So again, you've got basically bond-friendly news followed by a continued firm stance on inflation. So I think that's somewhat of why the market reaction has been muted. On deck next week, economic information that could be a big mover in the market. The big one's going to be the PCE report on next Friday, the inflation report. But on Tuesday, we've got new home sales. Wednesday, we've got mortgage application information as well as the minutes from the most recent Fed meeting that are released. Thursday, we've got initial jobless claims as well as a GDP reading and pending home sales. So next week could be full of some information that could be hopefully beneficial for the markets, especially the bond market, because again, we could use some bounce back and improvement in interest rates. I hope that you all have a great weekend, and I will see you on Monday.